Welcome to the CISO Community Circle Mission Ahead series show. This episode is going to be about cyber insurance. It's kind of fraught for people like me and people in the cybersecurity industry because it's important for us to know something about risk. We deal with risk every day, but quite frankly, we don't know a lot about insurance. And the more I talk to the insurance professionals, the more I realize that to be true. So ISC2 Colombo Chapter is trying to bring more information to the community on the cyber insurance this year. Will cyber insurance make a major impact on risk management, covering information technology, data protection, operations technology? Over the last couple of years, insurance firms have slowly been gathering a clear picture of what cyber attacks cost their clients. A few major incidents related to NotPetya that involve the corporate software in 2017, or to talk about the SolarWinds and the Colonial Pipe, have shown just how big the fallout can be. But it still has not been a truly catastrophic cyber attack. So how is cyber insurance industry and the clientele preparing for one? I have with me three prominent guests, and we are going to talk about cyber insurance. Joining us to discuss is Dharini Fernando, Certified Cyber Insurance Specialist with Steuart Insurance Brokers Limited, Kaushini Dayawansha, Certified Cyber Insurance Specialist, HNB General Insurance Limited, and Suresh Emanuel, Chief Information Security Officer, Hatton National Bank PLC, and the Chairperson, CISO Community Circle, which is an ISC2 Colombo Chapter initiative. I could go into a lot of background on all three of them. All of them have been involved in cybersecurity, cyber insurance for several years. I think at least get us started to learn more about this. Welcome to the show. Let us see how we can move from here. So I want to really talk about a lot of things, but for today's show, I have narrowed it down to a few basic topics, as we plan to have a series of episodes covering various other topics in this subject. So Kaushini, I would like to bring you in and ask you this simple basic questions. Why should an organization consider cyber insurance? Kaushini?
Thank you, Sujit. So actually, organizations are becoming more vulnerable to cyber threats due to the increase in reliance of computers, networks, programs, social media, and data. So when I say this, like if I take prior to 2019, not many of our employees were given laptops or work from home facility. But post COVID-19, the reliance on these reliance on the laptops, the IT infrastructure accelerated. And with this, it has become mandatory for the organizations to relook at whether their cyber security systems are in place and whether the employees really abide by the internal controls which are in place. And the organizations also look at whether each and every corner of the aspects are being met. If not, what happens is it could be a catastrophic disaster, not only to one particular organization, but including a good nation, especially a country like us who have really gone down on our financials. We will not be able to tolerate any catastrophic event, especially if you take the banking and the finance sector.
Right. So that gives us a perspective. You touched on a couple of important things, right? I mean, the pandemic. The pandemic changed the landscape, the way we worked. We had people working from home. Today we say we can work from anywhere. So that status has not changed. We've given a lot of flexibility to our users. Then we're also seeing adoption of mobile devices. The variety of them has significantly perpetrated into our environment. Then you also touched on the importance of economy, right? So the economy is bound, and I think the financial institutions are a key player in keeping the economy going. So not just the banks, but we are also talking about the central bank, the stock exchange, and then of course the ecosystem where we're talking about the customers of the banks. Because you need to trade, you need to buy, you need to sell, so you need to transfer funds through a banking system. So that actually brings, Suresh, I have this question for you, and you can walk us through this, right? And I'm sure you have had some insights into what it takes to subscribe to a cyber insurance policy. So what would, in your mind, should organizations do before they subscribe to a cyber insurance policy? Suresh?
Yeah. So first of all, thank you, Sujit, for having me here today. So I would say, like, it's not just a task. Actually, it's a process. So which you have to really start early. You need to have adequate time to prepare ahead, because there are a lot of background work which you have to do. For example, first thing I would say, your expected, what are the expected covers, especially identify your critical business elements, whether you're, for example, if you map it to a bank, whether you need your card business also to be protected from this particular cover, or what are the other business lines, what are your digital other assets you want to expect to be covered. So because based on that only your expected covers will determine. Then also, understand, you do little bit of research and understand what are the general inclusions and exclusions of these policies. And also, there are deductibles in certain insurance covers. That's whether these deductibles in exclusions should fall within your risk appetite of the organization. Because end of the day, when you subscribe for a cyber insurance, then based on that, you expect that these risks should be covered. So then based on that, you can start articulating a proper RFP for a cyber insurance. So then only you can dictate the terms you want. Because if you don't, if you can't wait a waiting period for 48 hours, you can eliminate that from the RFP level. So by having these certain terms and conditions. And also, analyze who are the potential insurance and reinsurance, and there are especially the ratings. For example, there are plenty of independent ratings which you can find from the internet, for like Fitch rating, Moody's investor rating, S&P ranking, and there are a few. So based on that, you can especially identify their ranking and ratings. So then subsequently, you have to prepare yourself in terms of to analyzing your cybersecurity maturity assessment by benchmarking against the global standards, such as the NISC cybersecurity framework, one of the very famous on the ISO 27001. So against that, when because you have to expect certain questions from the cyber insurers for you to demonstrate your control environment to them. So to do that, you can do a self-assessment against all these global standards and frameworks, and you can analyze your current maturity level, and also plan to adapt certain frameworks which are specific for certain business lines, such as your PCI DSS. If you are a health organization, you have your HIPAA related controls. So there even SOC 2 related controls. So these controls are certain business specific controls you have to adapt, which actually demonstrate your ability to have a better governance framework within the organization. And also you have a better incident response in place within the organization. So you should have that should be ability to demonstrate to the cyber insurer. And also, one thing I realized with the experience is, whenever you plan for your strategic cyber strategy roadmap, we have to, adapt certain technical solutions and infrastructure. But when you do that, always aim for the Gartner's top leading products, because that's one reason I asked, because I came across a certain questions from cyber insurers where they sometimes specifically ask whether you use these products, because that's quite strange. But sometimes they recognize certain leading products, and they sometimes have that understanding that by having these products in your environment, it actually help you to reduce your risk. So those kind of things you can actually plan for it. And also you should be able to have the ability to demonstrate your technical, administrative, and physical security capabilities. Basically how your goals in terms of you having the preventative, detective, corrective, and the compensative are the deterrent control. So these control environment implementation and the ability to demonstrate how well you have a better cybersecurity environment, it actually gives a comfort level when the reinsurers calculate their level of risks. And in addition to that, certain, for example, data you have to get ready. For example, you need to have a certain level of BI level data for transaction data, volumes, even for each business lines, and even a number of active accounts, number of inactive accounts for a bank, even your financial total account statements to audit reports. Everything you need to have ready to to answer these questions which been asked by the cyber insurance as part of the process. So I would say, by analyzing what to expect in advance, and by starting early, you will be in a better position to answer them, as and when you answer them the right questions and accurately and more precisely to them, they will also, it's easy for the cyber insurer organizations to come up with by identifying the better picture of your organization, and come up with the most better suitable policy for you. So that's the better. It's actually a two-way thing where we have to help them also to understand, demonstrate the our ability to and our commitment to improve our cyber resilience. So these are the key factors to which I would like to mention here.
Thank you, Suresh. I mean, the takeaways is that this is not like walking into a supermarket and taking things off the rack and fill your bags, right? So you need to plan, you need to have a process in place, and you need to mature internal control framework or your internal control environment to a higher maturity level. So there are expectations, and there are challenges which the organizations will go through to achieve that level of maturity. Then this brings us to a very interesting scenario, right? While Suresh said these are expectations, right? He even went on to say, look at Gartner leading products when you implement certain technologies in your environment. He also talked about adopting NIST cybersecurity framework, 27001 certification. I think we can extend that list to subtype 1, type 2 kind of certifications. And there are so much of expectations. And then very specifically, he also spoke about defining your scope, right? He said, okay, what do you want to include? Do you want to include all your departments, or do you want to specifically look at only certain critical business processes? So to determine all these things, it's going to take time, right? So I'm sure you've been talking to a variety of clients, both here in Sri Lanka and elsewhere. And we're also seeing, right? I mean, I'm yet to hear about a company which is filing for claims in Sri Lanka. I'm sure there are definitely there is an uptake in looking at cyber insurance compared to what it was pre-pandemic days. But when you look at globally, the uptake is very, very significant. So they're all talking about cyber insurance. And today it is becoming a mainstream subject. And even for ISC2 Colombo Chapter, we recognize that this is becoming a compelling risk mitigation strategy for all the boards, all the large organizations. So that means, Brave, how are insurance companies adjusting their policies? Do you adjust your policies to deal with the customer's maturity levels? Or do you expect them to tick off all the points and then say, okay, this is what it is? So how do you guys go about deciding the pricing for an insurance subscription? Dharini?
Okay, thank you for having me, Sujit. It's a privilege. So there are two perspectives to this. One is the global perspective and the other one is the local. So the global perspective is cyber insurance is basically driven mainly by the US market, and then second, probably the UK, London market, and then the European, etc. So currently, prior to 2020, the cyber insurers had a very good run, not very many claims, prices were reasonable. That's because the product was evolving. 29 and forward, it started with ransomware and then came the pandemic. And now currently, the claim ratios, that is the premium to claim ratio, is quite high. So if you take NAIC, not NIST, NAIC, that is the National Association of Insurance Commissioner's Office, I think, in the US. If you take the top 10 global reinsurers and insurers, their loss ratio will range from about 50 to 130%. So that is just among the top 10. So what happens is this kind of significant loss ratios impacts the local market as well when it comes to pricing. So in Sri Lanka, we don't do the pricing per se. We don't have the modeling tools and things like that. So we depend highly on the reinsurers. So there is a limited market for Sri Lanka, who the reinsurers who have the appetite for Sri Lanka is very small. So we depend highly on them. So what happens is the global impact or the global loss ratios also have an impact on our pricing as well. If we take, like, I'm sure even Kaushini can subscribe to this. If we take the pricing that we got from reinsurers 2019 and prior, it was like very moderate income. At that time, our financial institutions and our clients thought it was very expensive. But post-pandemic, now when you see the pricing, it's like 2-3 times higher. And we have also very tight restrictions on Sri Lanka after the currency crisis of last year. So we are in a little bit of a like an in-between place, which is like really difficult because like Suresh said, yes, there are expectations from the reinsurer side and the clients also have expectations. But pricing is something that we are unable to control at this point in time. So the pricing has been affected by two things: by the global loss ratios, plus the crisis of last year, where where our rupee was pegged at $200 rupees per dollar, and now it's like about 375. So in addition to the global impact of prices rising anywhere between 30 to 100%, on top of that, we have the premium in terms of the rupee value doubling up. So I can't give you an exact pricing per se, because that depends on customer to customer, client to client. Like Suresh said, if you have a very good security posture in your company and you're engaged with the security hygiene and doing everything that is required to do by a blue chip corporate, yes, you will have a better response from reinsurers. But if not, we have seen, and I'm sure again, I've worked with Kaushini quite a bit, so we have seen outright, total rejections. So that's where we are in terms of pricing. It's expensive, but still when you compare to the exposure that you may suffer, it's still, it's still very much less.
Right. So I'm picking up on a few things, right? So even if an organization has the money, that doesn't mean that they can buy a cyber insurance. Why? Because they're expected to demonstrate not just by using the right technology, but also ensuring that they have the right processes in place.
Absolutely.
Right. So we are talking about preventive controls, which Suresh briefly mentioned about. We are also talking about the detective controls, and then we're also looking at response and remediation. So I guess what the insurance and the reinsurers are looking at, do you have a framework which talks about how you plan, how you protect, how you detect, and then how do you, once detect, respond and remediate those threats?
And like Suresh said, the attitude of the management is also very, very
it's
important.
Also
how you come across this.
Absolutely. So the other thing which which caught my attention is the global loss ratio, right? You're talking about 50 to 100% plus
among the top 10.
Among the top 10, right? And then we can imagine what could be the case for the other people, right? It could be much more than that. And I was actually talking to another insurance professional a couple of years ago, and we were at a conference, and he actually heads the Insurance Institute in India, in Noida or Delhi. So he said the difference is if you're looking at a fire risk or theft, you can estimate the value of the asset. So you can quantify it.
Yeah.
But in cyber, it's very difficult to put a value in an asset. Right. So when an organization says, I want to insure my data, can you quantify the value? So the organization should have a method to quantify the value of the data. And looking through that, it's not something you can look at the database and say, oh, I have 100 records, it's an X price. No, it's not that, right? So I guess it takes a lot of effort, a lot of other factors which goes into it, right? The regulatory penalties, you may be looking at the reputation risk, and in terms of training, development of people, implementing process. So all of them add to that value of your information. So then I'm going to stay with you, and I'm going to ask you the next question. You can walk us through this, right? Weather-related or natural disasters are something which we are very familiar with. Every time it rains, we expect flooding, right? And today, I think the world is experiencing extreme weather conditions, like we are talking about climate change. So where they're talking about extreme weather conditions where either it is snow, rain, or it is fire. So you give a catastrophic rating, right? So you can say if it is extreme, you would say category 5 or category 3 if it is a tornado or tsunami or even a cyclone. When you look at cybersecurity, how do you relate it to something in respect of a natural disaster? So the question is, catastrophic cyber attack. Do you have a definition for a catastrophic cyber attack? And how do you cover it in your cyber insurance policy, if it is available?
The cyber risk in terms of insurance is still evolving, but there is something called catastrophic situation. And generally that is in general insurance terms, that is defined as a single event or an incident which gives rise to many losses across the spectrum of whether it's corporate, whether it's individual, whether it's geographical. It affects many policies and many risks. So that would be what you call like we haven't actually, like you said at the start, we haven't seen a 9/11 kind of situation where cyber is concerned. But
or even the pandemic, right? Where we went for a total lockdown globally.
Yeah, and still, we have not seen cyber loss in terms of, that scale. But with, with cloud infrastructure and, with the technology evolving, you can perceive that at some point in time, it's like not when, it's like not if, but when you can have a systemic kind of a calamity, I would say. So yes, it can be covered. So that's why the exposure modeling, in terms of if you take a reinsurance company that, or an insurance company that accepts many risks from all sorts of jurisdictions, corporate risk, SMEs, they are very careful about keeping a tab on their exposure. So there is like what you call exposure modeling, but we don't get that kind of thing done here yet, because we are still not, we are in the infant stage or even before. So we are learning as we go along, and we learn from reinsurers. That's how even other traditional policies evolve, whether it's fire, which is about 200-300 years old, motor, a century old. Prior to actually cyber, the newest policy was D&O, which started somewhere in the 1960s. So this is still an evolving process. Yes, it can be covered, but before the catastrophic, I think the individual risks also have to be covered. So. Yeah, so does that answer your question?
Yes, it does. It does. And since we are going to come back and talk about this more in the future episodes,
yeah.
So I will have more questions coming up in the future for you on this subject, right? So I'm moving on to Kaushini. I'm going to bring you in here, and you can walk us through, right? I mean, Dharini did talk about exposure modeling, and then she also spoke about one specific thing which caught my attention. One single event which can have a significant impact or a loss. Right? We talk about business continuity plan, we talk about disaster recovery. Now, you started your opening remarks, we talked about internal controls. And Suresh also talked about a solid, mature internal control framework. Now I want you to walk us through and tell us what is the minimum basic internal controls required to be eligible for a cyber insurance policy. I know it's a 1 day or 2 day topic, but I'm asking you to take 3-4 minutes to briefly tell the audience what is that minimum expectation. Kaushini, over to you.
Thank you, Sujit. Actually, before that, I would like to just lighten up the forum by letting y'all know what we evaluate as underwriters, what the reinsurers evaluate and basically expect from the companies when evaluating for a cyber risk. So we would be looking at the existing monitoring software, because we believe that if you can't see it, you can't defend it. So there has to be monitoring in terms of the internal controls. So there has to be software involving that. And also how you do your data management, because this is directly linked to privacy breach. And then what are the security procedures you adopt? Say, for example, how you would manage your email security and your authentications. So all this would lead to a final conclusion as an underwriter, whether this cyber risk is viable to take into our books or not. And what is your data breach history? Because we have seen all around the world, if there is a ransom attack on one particular day, he will leave cookies and he will again return back. So we will also be looking at the breach history, and so that we would want to know whether you have done the patches which will give zero effect to their returnability. And finally, we will also be looking at the relative benchmark with the other colleagues of you, other competitors, so that you have adopted the minimum requirements. So that is how the underwriting process would do. So if I would go more detailed, for example, the existing cybersecurity monitoring, what we are expecting as the minimum. So that continuously monitor your networks, cloud assets, and endpoints to detect and continuously respond to threats before they become breach. So that is the preventive mechanisms, whether they are in order or not. That is what we would like to have. Like, say, for example, if it is network and cloud monitoring, whether you have 24/7, 365 monitoring at network and clouds. So you can't take a day off when it comes to these kind of security measures. And what are your endpoint monitoring, whether whenever user, whether they always lock their computers, the physical security plus the in detail, like the password settings, to all these extent we would be looking at. So whether they would constantly change their passwords, whether there is requirement or not, or whether they can share their passwords with anyone else. So these we'll be looking at. And security information and event management, whether for example, the asset discovery and inventory, whether you would be doing vulnerability assessments, intrusion detection, behavioral monitoring, and the log management. So these are the things we will be looking from the monitoring aspect. And then also we would also be want to know, because sometimes the cyber risk is inherent from industry to industry. If we take a banking or the finance industry, the cyber risk is much higher compared to a commercial entity, because the criminals, they are much more attracted to these financial institutions, and there can be breaches. So to gain understanding of your company's operations, we also would require what is your industry, and whether to what extent you would be holding the information about your customers, because this is much more linked to your personal data protection, which also would give rise, say for example, if you are working with the European Union, you are exposed to GDPR. So we would require you to classify your data. So that internal control needs to be implemented, because on one hand, if you are working with multi-jurisdictions, you may be exposed to their data protection acts. And now that from 2022 onwards, we have the data protection act implemented in Sri Lanka. Yes, you are again vulnerable to implement the standards which are expected by the Data Protection Act. And how often you would be taking the data backups, because we expect the companies at least to take data backups every day, because in case of a data, say for example, in case of a cyber attack, the loss would be minimum. Because sometimes in case, say for example, if there is a ransomware attack where your database was compromised, at least you will lose only your data for a specific time frame. So taking data backup is a must, which we will be looking at. And so the questions we will ask is do you back up all your data on regular basis? So if the question says no, then we have a serious question mark on our head. And is data backup they are located on somewhere else, or whether they are stored in the same place? Because a person who comes in, a criminal who creeps into your system, he will have access to all these sites.
Absolutely.
So that is the reason why we ask this question: is data backup location other than the main server? And
Right.
also like how you store your confidential data, whether they are segregated, and multiple inferences to prevent total loss in a breach. So that like at one go, you will lose only one set of data, but not the entire set.
Mhm.
And do you have a disaster recovery plan in place for a cyber attack? So that is the reason, Sujit, like when we are doing cyber insurance, we always ask whether you have a BS. And sometimes, like when we request, can we see your standard data, like a disaster recovery plan? And sometimes they ask why you need, and also sometimes they are very reluctant to share. And to see when you go to the very niche of it, they have not updated. So that is the problem. But
Absolutely.
the reluctance come in another form. But end of the day, when we really sit and when we really tell them, no, we need to see it in order to get it, and when the senior management push it, and then when you get it, you see they have not updated. So,
right. So that brings me to a very interesting question. So I'm going to stay with both you and Dharini, right? So both of you can respond to this. Two things I want to talk about. One, you said that people don't give the information, but when you insist, that you find that they have not been doing it. So the excuse they normally give you, these are confidential information that we don't want to share with you, in reality is hiding a fact. Is that what it is?
yes, to a certain extent, these are
Not all the
like
time.
the findings with some clients, but some clients, they genuinely feel that these are very confidential. This is the core things, because if it goes to a wrong hand, then we will have a lot of repercussions. Therefore, they may be scared to divulge the information. But on the other hand, I have found out that some customers, they really don't have the business continuity plan in place, which has been like they have one, but it is not updated.
Right.
And
So
there
I'm
is
going to
no
pause you.
custodian.
Kaushini, I'm going to pause you. I'm going to bring that in, right? This is becoming interesting. So what do the auditors do?
What do the auditors do? Okay.
Right.
Well,
So they're getting audited every year.
yeah.
So you go in there and then they say they want to, probably the auditors say you need to get a cyber insurance policy. And then you solicit, you request for information and they say they can't give it. And then you discover that's been done. So what are we missing, or what is the management missing here? Dharini, your point on this. I know this is a out of turn question for you.
Yeah. So like Kaushini said, that is like one aspect of it. And the other aspect with clients is, I'll get back to the auditors. The other aspect is actually you deal with, especially for cyber insurance, you don't deal with the normal procurement teams. You either deal with the IT or the ERM or the risk department. So now they are not exactly used to dealing with cyber insurance. For most of them, it's the first time around,
Yeah.
So the first time you get the questionnaire, it's very cryptic, the answers, we will give you the minimum, try and kind of, work something with that. So this is why this process takes, this long actually. Cyber insurance, sometimes we need as much as 6 months to procure a quote. And most of the time it's because of the lack of information. Either there are gaps, like, how Kaushini explained. So that is one area that you have to overcome. And the other area is the people that you talk to genuinely feel that, it's not necessary for us to give our sensitive information. So what you have to do is you have to build up the confidence. That means you have to be able to speak the language that Suresh is used to. At least he has to get the idea that I understand his domain, not as much as him, of course, but you have to show that you have some kind of, understanding. I think that is part of the problem, even with the insurance industry here, I would say. I don't know whether I'm telling anything controversial, but that's the truth.
We like
So-
controversy.
but that's part of the problem. So if you don't understand IT security and how that aspect works and how the procedures and processes, if you don't understand that language and you are the person between the insurers and the reinsurance and the client, well, that's going to be a problem because you have to understand both sides. I'm an insurance person, but I have worked on my knowledge on the IT side as well. So I can sit down, gain their confidence. That's how I actually work with some of the clients. I try to work in getting their confidence in the subject matter. So we have made progress, I would say, in the last 1 or 2 years in that area. So
I'm just going to pause you here.
Sure.
Right. So I'm just going to circle back to something which Kaushini said, right? So either of you can, or both of you can give me a response. You said that you will use your internal systems, what you have in your insurance company or with your reinsurer or underwriters, to assess the eligibility of the client.
Yeah.
The question I have for you is, would you have a database when you said you would compare with a similar organization, their maturity levels to your prospect today? So does that mean you have a way of even finding information which probably the organization is not aware? For example, right, let's say leaked credentials. Information has leaked. It's now trading in the dark web.
Mm-hmm.
Organizations may not know about it.
Yeah.
But would you do that due diligence before you issue a policy? So I'd like to hear from Kaushini first and Dharini.
The reinsurers
Go ahead.
The reinsurers actually do that. They do
Okay.
a non-invasive scan to start with. They will check on whether the information is available in the dark web and things like that. They do a full gamut of external scanning to see whether a risk is eligible. That's part of the process.
So at what point in time will they do it? And if they do, now let's say I start an engagement with you.
Once we send the information to them. Let's say
Right.
the initial questionnaire, they
Yeah.
will do a scan of it and they will check whether they really want to go into it. Because you see, each case, each proposal takes a long time, and it might convert into a business or it might not. So that's why that initial questionnaire and the information that Kaushini illustrated, that is why it's so important to get the attention of the reinsurer, because right now Sri Lankan risks kind of take a backseat because we have issues here, we have issues of remittances, that's another issue which comes up. So what I tell the clients is, do something, do a questionnaire, fill it up in a way that it gets their attention. So
right. I'm going to pause you here, Dharini, right? Yeah. I mean, I want to hit one specific point. The trigger point, right? You give me a questionnaire or you give a client a questionnaire, you get them to respond. Some will diligently do it. Some will do it sanitized, scaled down, or they may even say things which are not there as, yes, it is available. Right? Now, the moment
that's
the
a bit
client...
tricky if you say yes to something which you don't have.
Correct. That's an integrity issue, right?
I'm not getting it affects a claim in case it of a loss.
Correct. Exactly. So now I'm trying to look at the point at which the reinsurer does a background check, right? So where does that start? Is it when we start talking, or is it when I fill in the form and send it to you? Here is my request for a proposal. Come back to me with a quote. I think this is something very, very important.
Yeah.
I'd like to spend a little bit of time, educate the people out there saying why, at what point in time, these things will become a potential problem, even if they have the money, the desire. Let's assume the economy improves and that, that we don't have any restrictions, then you still don't get it.
The thing is, the first contact point with the reinsurer is who's actually the underwriter in the Sri Lanka situation, is when we first submit the the information pack. So we try to assess locally as much as possible, and sometimes they're willing to give additional information, and some people are not. So when you kind of hit a wall and you realize they don't want to give any more information, then we try to do with what we have. We also do our, we also search as much as possible for information that is out there in the website, and we try to, give as much information as possible. Maybe not on the security side, but give a, a more wholesome picture of the corporate. And so once that information goes, that's the point in time when they will start, looking at it seriously. So when they get the information and they do some non-invasive, checking, scanning, whatever, and if they feel okay, the risk is not up to the mark, they might not go any further.
Right.
But
So in other words,
sometimes some underwriters might pursue you a little bit more, say, tell the client we need this. So that's a good sign. But to get the initial attention, we need to give information. Otherwise, how would you know, even if I'm the underwriter, if I don't have information? I mean, if I'm sitting in London and the risk is in Colombo, and yes, I can get certain amount of information from checking the website and doing the scans and checking whether their information is available in the dark web. But still, I need to get a little bit more in depth as to the attitude of the management, attitude of the company or the bank, attitude of the CIO. That all comes through the responses, in the questionnaire. So the better ones give better answers, obviously. So that it makes our work also so much easier. Okay. Maybe Kaushini also can add some, insight into that.
Kaushini, any thoughts on that before I move to Suresh and talk about some of the stuff relating to risk? Go ahead, Kaushini.
It's a very timely question, Sujit, because how I have worked with a insurance company prior I joined HNB, that is Allianz Insurance Lanka Limited, and they had a reinsurance arm of it. Because of that, I got the opportunity to understand how they would evaluate a real cyber insurance underwriting process. So what they do is, moment we submit a proposal form, they will be they would take all these data into their system, and they have a sophisticated system which is also a little bit linked to the findings of the dark web, whether there had been any experiences where the dark web is selling some of the information they have taken from this particular client. So with that, they will be assessing the risk. So say, for example, they will have kind of a risk scorecard where they will know, okay, whether they are strong in this aspect, and whether they have internal controls which are strong, or whether they have any reputation risk. Likewise, they will be assessing the risk, and with that assessment only, they are happy to look into the client. Before that, they will just request us to submit the proposal form. So similarly, in other reinsurance companies also, I have given the understanding that they too use tools to evaluate the customers, because they are linked to some other software ventures who can give data with regarding their exposure onto the dark web. So that is how we would evaluate. So in Sri Lanka, the company which I'm working for, what we use is, we are again using a software company where they will be giving us a risk scorecard to check the vulnerability of this company, this particular proposal holder. So that
basically
we are
a non-intrusive, non-invaded assessment.
Agreed. So
Super.
With that,
I think that brought in a lot of clarity, and I'm sure the people who are going to watch this, who are listening to this, would gain a lot from this specific 2 points. and I'm sure Suresh, you can add to this conversation with a specific point which you are talking about, is while the insurance companies would do a background check and do an assessment, when you or anyone, any potential person who is looking at subscribing to a cyber insurance, should they be also looking at how it would affect the other organizations? I'm talking about a ripple effect or a downstream effect. For example, if today, let's assume, if there's an impact to the Colombo Stock Exchange, how does that affect the economy as a whole? So many other organizations will be impacted, right? So there'll be companies which will be directly connected to the stock exchange. If you take a bank, there could be, the interconnections or interconnectivity between banks, or there could be connectivities between a customer and the bank. So today we are talking about a digital economy. The president is very, very aggressive in, advancing the digital economy in Sri Lanka. How would you see the cyber insurance coming in? When you evaluate a subscription, should you be looking at the ripple effect aspect of it? If yes, what should an organization be looking at? Suresh?
Yeah. So, Sujit, to start with, I think if we talk about a little bit also about the cost of cybercrime annually, we talked about a little bit earlier about this also. So I think as per the today's statistics, it's about $6 trillion globally, which is expected to be within a couple of years to more surpassing the $10 trillion. So that's how it is costly. So when it comes to the cybercrime. So when we talk about this ripple effect, especially, especially the industry-wise, sometime a certain, for example, even if we align this to a financial and the banking industry, if one bank get affected by a cyber incident, how that would affect to as an industry in the country, as well as, in the banking committee of the Sri Lanka. If we take certain examples, so sometime back when there was an incident happening in a particular bank, so that actually had an impact, obviously had an impact to the industry. So which actually resulted in the regulator to coming up with a totally very stringent technology resilience framework for the banking community. So which actually, maybe a reactive approach at that point, but still it's still worth it, where even after the incident, as a recovery process, as part of the recovery process, the industry is actually started to adapting certain technical control, which is governed by the regulator level. And also Sujit, I think the very important part of it is to industry level collaboration. So for example, when they are as an industry, how we can improve our cyber resilience capability. So especially liaising with the certs and doing certain cyber drills across the industry, and especially the very important ones, sharing the threat intel. Specific to there are specific threat intel collaboration which is required, especially in the bank and financial sector. That actually obviously the ripple effect, we can't really eliminate it, but we can minimize the impact of it. So especially learning from the lessons from your maybe from the same other your competitor bank or any other organization, and also the simulating the same incident within your organization. That actually help you to learn more about the the lessons learned, and also what could have gone right. I mean, what could have done right and what could have gone wrong. So that actually gives you the opportunity to basically to implement proactively the additional controls, because obviously when there's a cyber insurance or any other policies, any bank trying to subscribe, they're going to definitely look into these aspects. So how is your incident response capability? So how you basically learn from an industry within the I mean from an incident from the industry as well. And also you need to have that kind of a drive to change the organization culture also. For example, sometimes the ripple effect might impact your organization, cross functionally also. That culture, that meaning you have to change your culture to not a reactive culture, but also a resilient culture. So where you prepare yourself for something like that, a particular incident like that, maybe you might be expecting it in future, but based on that, you actually prepare for it. So that actually gives you a upper hand, which actually kind of puts you in a more stable position. So when you do have this culture and this the industry level, the collaboration and the threat intel sharing, and also building upon on the lessons learned from a different incident from a different organization also, which actually demonstrate the cyber resilient capabilities. So that's, I think, probably the way we can really minimize the impact of this kind of ripple effect. But that's actually a more or less a collaborative effect, where effort also through the other forums, like we do have like CIO forums, CRO forums, like the CISO community, and by these community and engaging and collaboration, that's probably I would say the key as part of addressing this kind of risk.
And at some point, if there are like notification laws, also that would help, because right now things happen and nobody knows, there is no liability on the part of anybody to report and understand what has gone wrong and to rectify it, to implement what Suresh is saying. It's really important to have that kind of infrastructure also.
Absolutely.
Yeah.
So Suresh, you did speak about a couple of things, right? And you did talk about more specifically about the cultural change. It's not just the behavior, but I guess the change which we are demanding is to meet the minimum standards, right? The minimum internal control framework which you need to establish. And I think during the discussion, Kaushini also mentioned, do we have a mechanism to monitor the effectiveness of those controls, right? So I have two more questions which I just want to ask both the ladies, right? I'll start with Dharini. Just one question. Today we have a leading case in the US, Merck, which was impacted by the NotPetya virus, right?
Can you just repeat that? Sorry, I lost you.
Are you able to hear me?
Yeah, can.
Yeah, okay. Right. Okay. So we have a leading case which is related to Merck in the US, where they were impacted by a NotPetya virus, and I think it cost them $1.4 billion. Right. So they went and filed a claim, and the insurance company said, this is not eligible. So they've gone to courts, right? So that discussion, we will have it on another day. But I want to briefly tell the audience, can they get cover for everything? Or will there be exclusions?
Okay. The issue with Merck is because of, it's a traditional policy versus, cyber insurance policy. So they would have taken a, completely different route if it was a cyber policy. So that's a different day's discussion.
All property damage policy. That's what they had.
The problem lies with what you call this property all risk policies, Yes. So where there is a list of exclusions and they say everything else is covered other than what is, named exclusions. So that's where the trick is. But only thing is, the policy, when it was drafted, it was never intended to cover the cyber, because that concept was not there, So that, but obviously the judge thought otherwise, because.
To add to Dharini, now actually after NotPetya case, the reinsurance community, they have started looking into the silent cyber aspect of it.
Yeah.
So because of that, like you will see like many of our, like all other conventional policies are added with cyber liability exclusion, or sometimes, like for example, for directors and officers liability, cyber affirmative cover. So many reinsurers, they have looked into this aspect and they will not keep the policy silent. So
Yes.
this is what one of the outcome of this case.
Yes, to a great extent, that's what's happening. But I believe there are still policies, especially the all risk type, which is silent, you know. So I think rectification is being done. So yeah, so that's what it is.
My last question for the day, right?
Yeah.
My last question for the day. Are there policies for the CISOs? Can a CISO be covered
under a DNO policy? Yes.
I don't know. I mean, what does that mean, right? Where will that
What does he
exclusion
want
be?
covered? The question is, what does he want covered?
Yes.
What is not covered for a CISO? Let's say the team is negligent. There's a breach.
Yeah.
Can the CISO be covered for liability? You have director's liability. Do we have cover for the CISO's liability? I'm talking with respect to the Uber case, right? I want to come back and talk in length about this in a separate session, but I'd like to have a yes or a no answer so that we can leave that there and come back and talk in detail about it.
This if the claim is on personal level, CISO will be covered by directors and officers liability insurance policy, provided the company has taken it. Yeah. So let me just give a brief snapshot of directors and officers liability. It is all the policyholder will always be the entity, but the insureds will be directors and officers of that particular entity who would be the decision makers. And in case of a wrongful act, which could arise due to their negligence, will be, and if it gives rise to a personal liability, then the policy will trigger.
Actually, there were a slew of cases, I think, in the US coming from the DNO policy, especially after the pandemic and ransomware being increased in claims. I think there were like quite a few claims for negligence. So I think the DNO will respond to Suresh.
Sure. So I think we're running out of time for today. So in closing, 30 seconds, right? What is that you want to leave as a thought with the audience so that they can look forward to the next session? So what are your closing thoughts? 30 seconds. We'll start with Dharini, Kaushini, and last Suresh.
Okay, my thought would be sometimes, you know, IT people think that they have the best systems and they are well protected. But with the current, you know, advancement of technology, there could always be things which are unforeseen. Then what are you going to do? So if you have a loss, then, you know, it can impact your balance sheet. So because of that, you know, you're never 100% covered just because you have the best technology or the best, you know, in terms of cybersecurity infrastructure.
What would you like to talk when you come back in the next episode? What are you going to be talking about? Just one point.
We'll go in detail into the coverage, exactly what is covered.
Okay, super. Kaushini?
Sujit, let me share my screen.
Sure.
Is it possible? I think host disabled participant.
I don't think we have enabled right now.
Because there is a wonderful slide which I want my
take it up next session when we do the second episode. Yeah, second episode. Let's do that, right? But today you can just be more crisp in terms of your thoughts.
So actually, like when it comes to cyber, I was like searching on what would be my last thought. So I found from Art of War, which Sun Tzu has said, if you know the enemy and know yourself, you need not fear the result of 100 battles. If you know yourself, but not the enemy. For every victory gain, you will also suffer a defeat. You know neither the enemy nor yourself, you will succumb in every battle. So what it means and what it takes from this Sun Tzu's Art of War is that CISOs, you know yourself, but out there, the enemy is the one which you don't know. So that is where the risk transferring mechanism comes, and that is where you need cyber insurance. Because you have to invest for tomorrow, because you never know what the cyber criminal might have done in its own. Because they are getting together, they are having collaborations, and they are outsourcing, mind you. So be prepared.
Sure. Suresh?
Yeah, so let me catch up with what Kaushini just mentioned. So basically, as a security professional, we have to be right at all times, whereas cyber criminals, they only have to be right at one time. So where are going to be the impact is right. So that's why it doesn't matter, like, sometimes certain CISOs and security professionals in the industry, when I speak with them, they are a bit of overconfident on certain things, because it doesn't matter, like, how good your security posture is. So cyber insurance is always be a kind of one of the, risk treatment option. We generally call it a risk transfer option. So I would say, like, you have to always consider, as we spoke about previously, you have to start early when especially, when you decide to subscribe to cyber insurance. And also my thought on, especially on the next episode, which we are, planning to do. So as a customer, one of the another gray area for me is especially the law part of it. For example, sometimes your insurer might propose you to the particular law of the particular governing law of that policy might be not your own country, maybe a different country. So sometimes it might be your own country. So what's the difference out of it? So which going to be the more beneficial out of it? And also, as Dharini said, the detail about each and every cover. So what is there, and what are the deductibles, and if the deductibles say if there are some particular amount, what that means actually. So if there is a waiting period, what is that waiting period? So what you have to do within that waiting period. So those kind of questions. So as a customer, I mean, to demystifying all these concerns, it requires tremendous amount of, learning of these policies. So I think if we can discuss in detail about a bit more technical session, or maybe probably the next couple of sessions which we are planning to do, it's going to be beneficial for the entire community.
Absolutely, Suresh. All your points well taken. Dharini, Kaushini, Suresh, thank you so much. It's been my pleasure moderating this session, and there was a lot of significant learning. There was a lot of clarity you brought into this conversation. So as I said, this is the first episode in a series of sessions which we plan to do. We'll be making an announcement of the episodes to come. So please look out for our social media platforms, the IC2 LinkedIn page, the Facebook page. We are on Instagram, we are on Twitter, and we also do have a YouTube channel. So you can also listen into our past episodes as well. So my takeaway is to come back and talk about what does the policy cover, right? So that's one of the things which Dharini said she's going to talk about. So we would have one session talking about the coverage. Then we're also going to be talking about breach response. In other words, the breach life cycle. So start to the end. So we would talk about incident response, controls, remediation, an array of things which comes part of that, right? Then we'll also be talking about, as Suresh mentioned, the legal liability. So what does it mean from a network security perspective Privacy is another topic. I would like to have a separate session talking about data protection and how that liability and the insurance cover, why is it required, and how it would help us to tide over the regulatory defense. Then, of course, we're also talking about from a customer remediation perspective, because at the end of the day, in all these breaches, the person to be impacted is the customer. Right. So with that note, this is Sujit Christy signing off for today and look forward to seeing you in another session. Thank you and you take care.